Intuitive Surgical designs, manufactures and markets Vinci robotic surgical systems.
Very expensive machines that get used to do repetitive and very complex surgeries. So they are bought by the hospital groups or by private, groups of physicians. High margin, amazing
state of the
technology.
art. Market cap $27.3 billion, price to earnings ratio 37.7, no dividend yield. How strong is the moat around this company?
Quite a strong moat. A lot of annuity income. So you buy the robotic equipment once as a hospital, but then you need to keep on buying the consumables. And that is where they make really high margins. It's almost like a Gillette razor model or a HP printer model, where you think on the face of it at the purchase decision, you're getting good return on your investment. But as that replacement of the consumables kicks in, the economics shift more towards the company rather than the buyer of the product. A great product with great annuity income for the seller of the product, Intuitive Surgery, so I like it a lot.
I love annuity income. Let's look at the share price graph. Paul, don't you like annuity income?
Yeah, it sounds good. Sounds good. Somewhere along the line, but probably not in this chart, they bought out a competitor where there was a copyright patent dispute about who'd invented the technology. A lot of these companies come out of very talented people operating in academic institutions, which then goes into the private sector, then they get venture funding, then they bring them to the market. So it is attractive. I think there are a couple of these machines in South Africa, but I think they're probably only, a couple of hundred around the world, or maybe it's a couple of thousand. It's still a relatively high-end, expense item for a hospital.
And the element of the moat that JP referred to.
Yes, and a huge market which they are addressing. So even though now it's only the most well-off hospital groups that can afford to buy these, as they have more in the market, that price will come down, but the value of economies of scale will mean that the company itself will actually make more money even though they cut the price.
Well, the key, more annuity income.
Exactly, which is the key to making the higher margins, even though they drop the selling price of the unit. So
I'm getting excited about this one.
This is an interesting aside. I mean, the way these things work is the robot is busy doing the surgical work on the patient, right? The doctor is sometimes sitting in the next room. But in theory, if you've got a high-speed internet connection, the doctor could be sitting on the other side of the world. And that sometimes happens because clearly the person who operates the robot, that's one thing, but you've also got to be quite skilled at what it is you're doing to the person.
Would you rather be operated on by a robot or a traditional surgeon?
I think the robot is much better. There's absolutely no doubt that if you're trying to suture one of your thin veins or arteries, which is less than a millimeter, that some guy with a microscope or torch on his head is not going to do as good a job as the machine.
But what about power cuts?
Look, I don't think you should be using machines like this in places where, Eskom has got a track record of blackouts or
I had
brownouts.
to throw that in there, but of course they will have backup generators and the robot will keep going. Let's not be alarmist out here. JP, is there any downside in terms of making an investment? We saw the dip in the curve and now the rally up. Is there still potential to get in?
Whenever a company has got very good IP, intellectual property, it also attracts competition. So if the next very clever PhD upstart creates a competitor to the Da Vinci machine, that could be a risk. But it comes to this whole network effect. The more machines out there, they can drop the price, they make money from the consumables. It just creates a bigger barrier to entry, a wider moat, and therefore, because they bought out the one competitor that were relatively early in the game with them, it means that it's very, very hard for the next competitor to enter the industry. So I think this company is one for the long term that's extremely well placed.
Good.
Paul?
So let's go hot on that one.
Hot? Are you hot?
Also hot, yes.
So